Good afternoon and welcome to the main stage. Our session today I've entitled, slightly different from what our presenter said, the integration paradox. What we would like to discuss is the relationship and the controversy and whether it's a controversy or not between fintechs and old-style traditional commercial banks. For many years, the financial world followed a very simple narrative. We were told that traditional banks were slow, heavy legacy giants. We were told that venture-backed fintech startups were the agile, fast movers coming to take away clients from banks. This is what we were told. But the reality in Romania, for example, and also across Central and Eastern Europe, is far more complex. The lines between giant banks and nimble tech startups have blurred completely. To explore this tension, we have two excellent leaders with us. So on my immediate left is Ionut Patrarhu. He's the vice president leading the SME division at Raiffeisen Bank Romania. He's a former tech entrepreneur and co-founder of Seedblink. He now runs a massive digital banking unit at Raiffeisen Bank here in Romania. And next to him is Andreas Nemet. He's the managing partner at Shape Capital Partners. His fund manages around 150 million in AUM, investing in disruptive B2B software and fintech scale-ups across Europe and specifically in Central Eastern Europe. Gentlemen, welcome, and I'd like to invite you to have a candid discussion rather than exchange platitudes, if that's possible. So, Ionut, let us start with you, please. So the old view was that banks cannot innovate. However, Raiffeisen Bank Romania now employs 300 developers, software developers. In the front office, your teams can design and deploy almost any digital solution they choose. You are essentially operating as an IT company with a banking license. But here is my question. You have 300 developers building these beautiful front-end tools. Yet, obviously, they have to be connected to the back office. They must pass through strict, sometimes slow, legal and compliance frameworks. So does having 300 developers create a true startup culture? Or does it simply create a shiny front door on top of a heavy corporate machine? Digital front door, I mean, of course. So how do you prevent internal compliance from slowing down your code?
All right, so Raiffeisen Romania, at least, it's having a secret, and the secret is called internal governance. Two horrible words invented by UK people, governance at least. And the governance means that we are structured in tribes. The tribes are structured in squads, and we have streams. So somehow the product organization is linked to semi IT developer teams. Although all the 300 developers all together, they work for each and every product. So if that wouldn't have been happening, we couldn't have said that we are sort of an IT company working with banking tools. But this was a surprise for me. I just joined the bank 6 months ago. I was part of another bank for 10 years, one which is a sponsor here. Then I went 15 years in entrepreneurship, out of which the last 7 to 8 years into fintech. And then I went back to Raiffeisen. So that was a strange journey, but somehow it happened. And this reminds me that 7 years ago, when I started to invest as a founder in fintech, I was convinced that big banks cannot develop. Big banks are going to lag. Big banks are going to remain just big banks, and they can't innovate because they don't have the structure. But somehow today, I see the reality very different, because big banks are not stupid, and I should have known that. They have a lot of money, they have a lot of resources, and that's why they cannot afford to be stupid. And not being stupid means that they look at the target, they see the ball, and they need to score. And when they need to score, they need tools, they need players, because the goal is there. So somehow there was a period of 7 to 10 years when everybody just played around. Now things are a lot more structured. Fintechs are more structured, banks are more structured, and the relationship between them is more structured.
Very interesting. So, Andreas, let's bring you in. You fund independent fintech scale-ups like Tide and Wave Flyer. So you used to rely on the fact that what Ionut is just being saying, relying on the fact that banks were too slow to build good tech. And certainly in some Western countries is still the case. So for example, in the UK. But now a bank like Raiffeisen has 300 software developers, software engineers building competitive tools in-house. So does this change your investment strategy? Is the traditional bank now moving too fast for your independent tech startups to win this market?
I think it has very much changed over the past 15, 20 years, how startups and large corporates work together. You know, I've been actually, I worked on in a setting where 25 years ago, we started the first fintech company in Austria. At a time, probably no one would have called that fintech, but we have built the online brokerage company for the Erste Group, which was actually back then also a corporate venture building activity. And I think it was only until 2008, 2010 when the real fintech movement was actually united, just during the financial crisis. And I think we've seen now a tremendous development over these past 15 years when tech-enabled businesses were actually changing the landscape in the financial markets. And I think it has become so much easier for startups to build financial infrastructure. Like 25 years ago, you would have needed a lot of investment in your tech, in your ability. So I think the market entry barriers for new startups entering fintech are very low nowadays. But at the same time, I think that has not proven right that they are totally disrupting the incumbents and that there are only fintechs now ruling the world. Large banks, large corporates are still there. And I think startups have wonderful things to offer that large banks still lack. But at the same time, I think incumbent banks also have a lot of resources and experience that startups need. So I think the partnership is what we are also trying to facilitate as an investor.
This is very interesting. So let us move to the second dimension, the battle for the customer interface. Andreas, your portfolio companies allow small and medium businesses to manage their cash flow, take automated loans, and run their companies through their own software, independent software platforms. Is your ultimate goal, or the aim of your portfolio companies, to try to push traditional banks into the background? Do you want banks like, say, Raiffeisen or other banks become more invisible, like regulated utility providers, like dumb pipes, while, say, your fintech platforms that you're investing in will own the actual relationship and the data of their corporate clients?
I think there are very few fintechs that are actually able to really are the shop window and moving banks really behind the curtain. The companies that we are investing in are predominantly B2B software companies that not rather disrupt, but rather provide the tools for modern day banking, be it regulation tech, be it fraud detection, be it also some of the rails for payment and then for lending. So I think that is not what we are aiming for, but rather we believe that these type of B2B software companies are excellent targets to collaborate, or we actually usually sell our companies to strategics, not only banks, but all players in the financial market segment.
So, Ionut, so you also don't see this as a threat. So you don't think that an SME client would say if they use an independent dashboard platform, they would spend their entire day looking at that tech dashboard, funded by Andreas's fund, and then they will stop thinking about Raiffeisen, and Raiffeisen will just be in the background, just as a utility provider. You don't see? Do you see it as a threat?
There is in this European world, at least, not European, because Klarna has listed in US. There is one Klarna, there is one Revolut, and these guys were capable to compete with the banks because they grew a lot. They are very big, but somehow they are transforming into banks. So they are transforming in banks, and then they start competing with the banks. So that's the danger that we see at the horizon. The rest of the companies, the rest of the fintechs, most of them are small. Most of them, from my point of view at least, should develop having in mind that they have to cooperate with big institutions, not to compete, because they cannot compete. It's very difficult to do that, but it's not that difficult to work with them. And it's a very special thing, because if you set up the architecture so that at a moment in time you get together with a big institution, is one. If you set up the architecture in order to compete with big institution, is something different. And I guess this is a challenge for a lot of fintechs these days.
What do you feel, Andreas?
I also add, I think it's not only a two-dimensional thing of either competing or cooperating. What we also see, one of our portfolio companies is an Austrian fintech company, the first unicorn in Austria, a company called Bitpanda. It's the Coinbase of Europe. And, they have built a very compelling 7 million customer franchise throughout Europe. So they are directly facing consumers. But at the same time, they also started a service they call the B2B transaction service. And they have actually partnered with the Raiffeisen group to enable them that every Raiffeisen customer can actually trade crypto right in the Raiffeisen banking app. So although they are partnering, they are also sometimes competing in the market, but we see actually both happening at the same time.
It's very interesting. So let us address the war for talent, for tech talent. In Western markets like the USA or the UK, developers chase startup share options. They hope to become rich. But in Romania, I understand, Romania presents a different reality. And also in other East European countries, most tech startups fail. And the ones that succeed, they often leave Romania for the Silicon Valley, London or New York. So therefore, local software developers prefer the solidity and high salaries and the massive computing power of major institutions like Raiffeisen or BCR. So, Ionut, you have successfully your bank has hired 300 developers, software developers, by offering this stability. This is why they chose you rather than working in startups, right? So, but stability is the exact opposite of the startup ethos. Can a team of engineers who chose, the comfort and security of working for Raiffeisen or Erste Group Bank ever build truly disruptive financial products? Or do you feel because they're so secure and safe, they simply build incremental updates? What do you think?
Actually, most of our IT developers, our engineers, they are in AI. So they're not building financial products. Financial products are imported most of the times. Because again, we innovate in marketing, we don't innovate in technicalities. And somehow there is someone who does the technicalities in 1 month instead of 1 year. There are all kinds of companies like FlowX is now. Lately, it wasn't such a good market for IT engineers in Romania. And not only in Romania, in Europe, everywhere. Because they somehow lost their edge. And working for a bank is a more stable place. You access a lot of resources, and you can transform the resources in something really meaningful. So somehow, I know a lot of people working for Raiffeisen, which are great engineers. I mean, we don't just take people, young people, we take experienced people from the market. And without them, we couldn't survive. So somehow, I guess it's a hunt for good people. And it doesn't matter if we talk about banks or startups. It's a hunt, and that's about it.
So, Andreas, do you see there is a competition for talent, for brilliance? Because without engineering brilliance, the startups scale-ups that you invest in, they can't survive, can they? Do you feel that banks are pulling away the best talent, so at least in Romania or other Central East European countries?
Well, I think in general, the human talent is, I think, one of the real competitive advantages of Central and Eastern Europe region as a whole, and Romania is, I think, very well positioned for that. So I think this is where we can build on. And I think it's very important, if you think of a startup founder, they are not going out of university and say, we want to build a fintech startup. Especially in regulated industries, I see this constant going back and forth between industry players, startups. So I think it's important that they work for large corporates. And I think that is this talent pool of 300 people that are working now there are actually also the seed maybe for the next wave of great fintech companies in the region. I think what we are also trying to understand and also help to facilitate is that there are different phases of startup life. You have the early stage seed companies that maybe are a team of 4 or 5 people that want to do great things. And I think there are good programs in place to support the early stage movement. But there is also this scale-up phase that we are as a fund focus on, where the companies are at 50 to 100 people, 5 million to 10 million revenue already. And at that phase, it's not all about money, it's not only about team, but it's also about building these relationships and business development with your P2P clients. And I think that is also where we as a fund try to make a very compelling offer to the incumbents, that they can actually also outsource some of their activities and collaborate with the scale-up companies. But we believe for a large corporate, it doesn't make much sense to work with an early day 4 to 5 people startup. It's just from an organizational and systemic view, just two worlds colliding here. But that only scale-ups are then perfectly positioned to be a good partner for a large bank.
And in terms of retaining talent in Romania, do you see it as a challenge, Ionut? Is this a problem?
Yeah, there is a problem between banks. We all the time have competitors offering all kinds of things to our engineers. There are also scale-ups which are looking for good, talented people and offering them equity. offering them ESOPs, so that is more than what the banks could offer, only in terms of salary, not more than that. So again, it's like always and everywhere. I mean, we have problems with relationship managers like we have problems with engineers. I mean, it's just good people and good talent.
And maybe let me add one aspect to this war for talent situation. What we are seeing in Western European markets more and more is that traditional banks are actually acquiring startups, not because of the product itself, but rather because of the people. So I think that I wanted also to conclude that, if there are startups turning scale-ups and then ultimately are acquired again by a large institution, I think that could also be a new model for how you manage your talent base over time.
And in terms of, Ionut, do you have any statistics in terms of retaining engineering talent in Romania versus, because I said earlier and you said that a lot of people are leaving for other countries.
I guess there is a natural rotation. There are a couple of percentages that leave every year, and you cannot do anything about it. Again, I think is the same rate as the salespeople. Probably you can simulate salespeople with engineers. It's not that big in back office. But anyway, it's a challenge, not bigger, or I should say probably bigger than a couple of years ago. Every year is getting bigger and bigger. Because again, people are free to circulate into Europe. They go everywhere. They go to UK, they go to Germany, they work everywhere they're called. And this is difficult to compete into a not global but regional market.
I mean, I can just share the results that we found together with Deal Rome. We are conducting every year a Central and Eastern European startup survey together with Deal Rome. And last year's results actually confirmed the previous year's numbers, that actually 48% of all the scale-ups from Central and Eastern Europe are relocating sooner or later. And number one reason is actually not lack of people or talent available, or that they just want to open offices international. But number one reason is actually capital, access to growth capital. And I think there are a lot of initiatives now going on at the European level, because I think it's, in general speaking, a European issue, but especially in Central and Eastern Europe. And I see that all happening even more often in Romania, that the companies are incorporated in London or the Netherlands. But I think that can only be changed once you can really build more Series A plus funds in the region that are actually also offering local capital to local scale-ups. In our research with Deal Rome, we actually found that out of the total volume that is invested at Series A stage, actually only 40% is from local investors and 60% is from international investors. And if you move on to the next stage, it's at Series B, it's 10% local to 90% international capital from outside the region. So I think, there is a huge opportunity, a rich pool of talent that is notoriously underfunded by local investors. This is also where we as Shape Capital position ourselves to be an alternative to local founders, not to move, but rather grow your company locally.
Amazing. Well, gentlemen, we must draw to a close. Our discussion today shows that the old corporate versus startup narrative is really complex. So things evolve all the time. And the modern banking sector in countries like Romania is no longer a slow follower. It is a powerful tech player deploying massive resources and hiring large engineering teams. And the true winners in this integration paradox that our speakers talked about today will not be determined by who is big and who is small. It'll be decided by who can connect the front-end speed with the long-term trust. So thank you, Ionut, thank you, Andreas, and thank you to our audience. Try to enjoy the rest of the event despite the thunderstorms.